Hi everybody, this is Liam Hulse and you are listening to the Market Watch Review. In today's release, we'll cover the following topics. USD Japanese yen currency pair continues to decline. Growth of retail sales in Britain. Rising oil prices. And an analysis of the Euro and USD buy deal. For the fifth trading day in a row, the USD and Japanese currency pair continues to lose positions, significantly outstripping the rate of decline in the US dollar. All this indicates an increase in interest in defensive assets. But selling on the market is no longer advisable because the quotes are very close to the technical support level of 104.40. Nevertheless, I do not exclude the seller's ability to continue to decline to 104.15. Now let's move on to Britain, which today reported on changes in retail sales. The growth of this indicator in annual terms was 2.8%. This is the maximum value since November 2019, but given the record decline in retail sales in April and May this year, this growth is very weak. Therefore, demand for the Great British Pound remained moderate at the time of the report's release. Pay attention to the Great British Pound and USD currency pair. Quotes are held below a fairly strong technical resistance level of 1.3. At the same time, only a breakthrough and fixation of the pair quotes above the level of 1.3030 will allow us to speak not only about the willingness of sellers, but also about the willingness of buyers to continue growing. To implement this scenario, not only a weakening in the USD is required, but also a strengthening of the Great British Pound, which may occur when a trade agreement is reached within the Brexit framework. I would also like to draw your attention to the black gold market. The price of the oil of the American WTI grade returned to the local resistance level of $41.5 per barrel, which is due to a steady pace of decline in US oil reserves. Let me remind you that the American Petroleum Institute reported a decrease in reserves by more than 9.5 million barrels, after which the US Department of Energy confirmed a decrease in reserves by only 4.4 million barrels. But as we all know, this was enough not only to break the resistance at $40 a barrel, but also reach the price of $41.5 per barrel. Considering the price of WTI oil failed to overcome the resistance level of $41.5 to $42 per barrel, buying on the market remains in a risk zone. In addition, it is important to take into account the decrease in buyers' activity in the US stock market. This is another deterrent factor for oil prices. I will conclude today's review with an analysis of a Euro and USD buy deal in the volume of a 1 lot. The long position was opened at 1.1760, right after the false breakout of the support at 1.1750. Take profit order was placed at 1.1850, the closest resistance level. As you can see, the deal was already being closed with a profit of $900, while the risk did not exceed $300. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.